this video, I'm going to show you the ultimate 15-minute liquidity flush out trading strategy that will help improve your technical analysis and also help you think differently from the 90% of the retailer traders. Like, subscribe and stick around for the full video. If you consider this high which was created, as price approaches this high, remember there are a lot of stop loss orders consolidating above this high, and also breakout traders are patiently waiting for price to break above this high and continue moving to the upside. The moment price approaches this high, it triggered all those orders and drive price to the downside. Okay, one thing you have to also know as a retailer traders, the market makers and the smart money will never trade the same way retailer traders do. Hence, they have to build an opportunities that will entice the retailer traders so as to create more liquidity, zone of interest, in order for them to feed their large orders. For example, the smart money and the market maker, they are of the opinion that the retailer traders are always programmed with the concept that support break, it forms resistance, and the market will then continue dropping to the downside. By so doing, a lot of retailer traders will be enticed with little or no knowledge of the market, will start taking position and stop loss slightly above the high and thinking that the market will continue dropping to the downside. The same at this level. But fairly enough, the moment these opportunities have been created for retailer traders, thereby creating zone of liquidity for the market makers and the smart money, what happened? The smart money and the market makers will now feel fraction of their orders in order to reclaim this level initially where liquidity has been flushed out. By filling their order in the opposite direction, remember, they will be in losses. But as price continues to reclaim this level, they are now filling their sell orders. Immediately their orders are being filled. What happened? You will see the market then gravitating to the downside with huge momentum and volatility. Traders who took position from this level, remember, all their stop loss are being triggered. And also, the breakout traders thinking that price will continue moving to the upside, all of their orders are being triggered. And what happened? All that one serve as liquidity to drive the market to the downside. This phenomenon is simply what we call liquidity flush out. First thing first, always on your 15-minute time frame, immediately you identify the structure of the market. In this case, where price was creating series of lower lows and highs in the market. Next, you have to target all the lower highs which were created in the market. This is another high. And wait patiently for price to reclaim back those highs, because these are the highs where the market maker and the smart money are looking to feed their order so as to there will be an equilibrium in the market. Because if the market maker or the smart money feed their position where retailer traders are also putting their orders, what will happen? There will be no equilibrium in the market. Hence, there will be an high impact on the market, wherein the market will now move in an abnormal way. To avoid that, smart money and the market maker will always look for zone full of high liquidity to fill in their orders so as to they can drive price into their desired direction without creating too much impact on it. As price approaches this zone, this level, what happens? Always consider two things. One, price must give you weak rejection. Two, there should be a candle close in the direction in which you want to sell. Immediately you see those two criteria are being fulfilled, with no hesitation, you can take a trade and your stop loss slightly above the weak rejections which were created, and ride alongside with the smart money and the market maker. Conversely, in an uptrend, Where price started creating series of higher highs and lows, we're in an uptrending market on the 15-minute time frame. Okay, immediately this structure is being formed. Target the higher lows which were created in the market. So if you notice, as price approaches one of this level here, it gives us what? Weak rejection and a bullish candle close in the direction in which we want to take that trade. Immediately those two criteria are being fulfilled. Take your trade with no hesitation and your stop loss slightly below the wick which was created, and what? Right alongside with the smart money and the market maker. Here is another example of liquidity flushing out. If you notice the structure of this market in the 15-minute time frame, we're in a downtrending market where price continues to create series of higher lows and highs. Next, we target our highs which were created in the market. Wait patiently for price to reclaim this high again, because above that high lies stop loss orders of retailer traders and also breakout traders waiting patiently for price to break above this level and continue moving to the upside. Immediately price approaches this level, what happens? You see price then drop with huge momentum and volatility very swiftly. Without wasting any time, it gave us this weak rejection and a candle close, and price continues to what? Drop to the downside, as you can see. Here is another example. As price continues to create series of higher highs and lows in the market, what happened? We immediately target the lows which were created in the market. Next, we wait patiently for price to reclaim these lows which were created. And upon price approaching this low, we want to what? See two criteria being fulfilled. One, we want to see price coming to that area giving us weak rejection. Two, and also a candle close in the direction in which we want to buy. Fairly enough, as price approaches this zone, it drop with what? Huge momentum to the downside. To the second, also the last zone which was created, price giving us what? Weak rejection and a bullish candle in the direction in which we want to buy. Immediately those two criteria are being fulfilled, what happened? Take that trade with no hesitation and stop loss, your stop loss slightly below the wick which was created, and right alongside with the smart money and the market maker. Another example on GBP/JPY. If you notice, as price continues to create series of lower lows and highs in the market on the 15-minute time frame, what happened? We now target our highs which were created in the market. Next, we wait patiently for price to approach those highs by fulfilling two criteria. One, giving us weak rejection. Two, and a candle close in the direction in which we want to sell. For the first level which was created, when price approaches that level, it gave us no weak rejection, neither a candle close in the direction in which we want to sell. Hence, that level becomes what? Invalid for us to take our trade. The next level, as price approaches, we started seeing series of weak rejections and what? A bearish candle close to the downside, thus confirming that this is a sell opportunity. Immediately that one is accomplished, we can then take that trade, stop loss slightly above the wicks which were created, and we can then ride alongside with the smart money and the what? Market makers. Here is another example on GBP/JPY. Always on your 15-minute time frame, make sure you identify the structure of the market. As price continues to create series of higher highs and lows in the market, what happened? we target all the lows which were created. This low, we have as well this low. We also have this low which was created, if you notice, this low. Alright, next you wait patiently for price to gravitate towards these lows which were created. By gravitating towards this low, we want to see two criteria being fulfilled. Price giving us weak rejection at that same level, and also a candle, bullish candle close in the direction in which we want to buy. For the first level, none of our criteria were met. For the second level, if you notice, price traded through, giving us nice weak rejection and a nice bullish candle close to the upside. Immediately, me seeing that criteria is an opportunity to ride alongside with the smart money and the market maker. My stop loss slightly below the wick which was created, and move alongside with the smart money. Here is another example. Here, if we notice, price was creating series of lower lows and highs in the market, thus confirming what? A bearish structure in the 15-minute time frame. Next, I'm going to target the highs, all the highs which were created in the market. Next, I will wait patiently for the market to approach these levels, thereby fulfilling two criteria. One, I want to see price coming to either of this level, giving me weak rejections, and a candle close in the direction in which I want to sell. As price approaches this level, you wait patiently for price to clear out liquidity, give you weak rejections, and what? A candle close. As you can see here, liquidity was being flushed out. We have weak rejection and a candle close in the direction in which we want to sell. Immediately that one is accomplished, I'll take that trade with no hesitation. My stop loss slightly above the weak rejection which was created, and move alongside with the smart money and the market maker nicely to the downside. And that brings us to the end of this video. If you have any comment, thought, or question you'd love to share, do so in the comment section. I'll be looking forward to hearing from you. For more content like this, don't forget to like and subscribe.